Not all news is created equal. Just because a stock has a headline doesn't mean it's a buy. In this video, I'll show you which news catalysts actually move stocks and which ones are just noise. So this is how I separate real runners from the fakes, the one and dones, the pops and the drops, and ultimately avoid wasting time on crappy junk setups. So let's break it down. What is a catalyst? Okay, a catalyst is a reason for the move at the end of the day. Occasionally we'll have stocks that move on no news, but it's so rare, so hard to time them. Like, the nice thing about having a catalyst is you have, there's a timestamp, a moment in time when it happened, and then you can get that news, make a trade plan based on the chart, and execute. With stocks that just start moving out of the blue, how do you even know they're going to start moving? Now, not all stocks, take off from news, but at least I have a piece of data that I can then apply to breaking down the chart and building a trade plan. When a stock just all of a sudden you're sitting there, it's up 100%. What do you do? Why is it up 100%? Was it a pump? Was it manipulated? Etc. Now, the catalysts that we care about that actually matter, real news. Now, you'll notice real is in quotes because we're delineating from rehashed press releases, stuff that's really fluffy. We want to avoid that very fluffy news. We actually had a press release today on a stock, okay, and had AI in the headline, but literally they just said that they were, this was the headline. They'd knocked down a wall and were getting ready to expand their AI data center, okay? That was, now you got to read between the lines a little bit. But if you read that, as soon as I saw that, I'm like, what is this? Okay, like, we're gonna do something. We're getting ready to do stuff. So that's the big thing you want to avoid. And listen, these companies, there's nothing wrong with that. Sometimes people think, oh, they're pumping. I mean, what these companies want you to do is to buy the stock. And if they're working on things, like, they want you to know about it. But what we really want to look for is when that plan that they're making comes to fruition, okay? We're turning this AI data center online. We're partnered with this company. So instead of knocking down a wall, knocking down a wall and getting ready to build a data center, we want to see, it's ready, it's online. We signed a deal with, obviously this would be a best case scenario, NVIDIA, Microsoft, Meta, etc. And that's what trips up a lot of people because they believe the hype, which again, companies just trying to get the word out. Hey, we're working on stuff. That's not going to create a sustained move. What's going to happen is you're going to get a lot of the headline chasers. And this is people that don't dig deeper into the story. And flat out, there's a lot of algos out there that are trading these stocks these days. And these algos simply look for keywords. And listen, these companies know that. That's why they do this. But they're dropping these keywords literally in the headline. And then the article fleshes out the fact that, again, we're just kind of getting ready to do all of this stuff. But if you've got a bot or a trading algo, or what really happens in penny stocks is people that simply don't take 30 seconds to read the article and they see AI in the headline, they just pile into the stock. Then the news starts to filter through. The real traders that read it are like, well, I'm not buying this, it's all hype. So you just get that one quick momentary spike. Real contract announcements, new products. I mean, new products are always huge if they're ready for market. This is another thing that trips people up. We've got this widget coming in 6 months. That's the kind of stuff you want to avoid. Here's another example. We had a recent press release of this company that had gotten their product into Amazon and Walmart. Like, it was a done deal. Amazon and Walmart that day were selling their product, okay? That's real. Talking about having a product in the future, you really want to avoid that. We see it all the time in biotechs. Now, it's kind of the nature of biotechs. A lot of these drugs take years, decade to develop, so they want that awareness out there. But what trips up so many people in biotechs is, again, they're chasing the hype instead of waiting for the real news. So that's another one to avoid, but we want marketable products. The other thing is companies that are hot sector plays and ultimately piggybacking on the big names. Now, this is one that kind of flirts with the line a little bit, okay? Because you'll see these companies that are basically mentioning things that are very similar to what the big boys are doing. I'll keep kind of going back to, AI and quantum computing right now, because that's the hottest sector right now. The Bitcoin treasury type stuff as well. But what they'll do is, like, say the previous day or a couple days before, again, an Nvidia, a Microsoft, a Meta will have a announcement about a particular AI technology, and then you'll see a lot of these small stocks piggyback on top of that. Now, the key is, if you remember what I said, is it's got to be real. It can't just be hype, okay? So if you get these hot sector piggyback hype plays, like I like to call them, if they have something that's real that you can actually buy, this is a Lucy, L-U-C-Y, a few months ago was this. They rode the hype of Meta's glasses. Lucy actually has a marketable product. And the stock was a great couple day trade, kind of settled back and came back to reality. But it had great momentum on day one and actually for multiple days because, again, people were actually posting pictures of their glasses and stuff like it was real. It wasn't, hey, we're working on something like Meta's working on. So hot sector piggybacking plays, real news, contract announcements, substantial stuff. And then the last one that we're seeing a lot of right now are these PIPEs, okay? PIPE is an acronym that stands for private investment in a public equity. So what that is, whether it be a wealthy individual, another company, right now we're kind of seeing this, even though it's not a PIPE, with a lot of Trump and what he's doing with investing in a lot of these American companies. Like we saw it with Intel. Now, not a company you would normally expect to see make the kind of move like Intel has this week, but that's because the federal government has decided that it's a company worth saving and they're investing your tax dollars. Like America is literally investing in Intel, and you can go back and look at the chart and it's up massive this week and still going higher. PIPE is kind of the same idea. It's really what I like to call a smart money play. Now, obviously, there's a lot of wealthy people with a lot of money that maybe aren't that smart. Celebrities, etc. Okay, but at the end of the day, when we think of these plays, is you don't get to the point where you have hundreds of millions of dollars or billions of dollars, and we'll see that in these pipes, and you don't get to that point without making good decisions. I mean, you have to be smart with your money, make good investments, or you don't get to hundreds of millions or $1 billion. So what I like about these plays is, if it's a hedge fund or just a wealthy individual, a family office or something like that, they've done their due diligence. They probably have a bunch of Wharton School graduates that know how to analyze a company. So, say I'm the guy that's investing this money. It's a $10 million, $20 million, $30 million. Well, I'm going to go to my team and I'm going to be like, hey, go through their books, interview the executives, do your research, check channels, check their technology, and come back to me because I'm about to put $20 to $30 million into this company. So it's a way to kind of ride their due diligence. Now, with any of these setups, you always have a stop loss. You always follow the plan. You can't become emotionally invested. But what I like about these plays, and many traders do, I mean, it's not me unique to these pipe plays, is you're basically borrowing that due diligence from that wealthy individual or fund, etc. So that has been very hot. And then I touched on this earlier. Right now, at this precise moment in time, fall 2025, these Bitcoin and crypto treasury plays have been arguably the hottest sector all year. We've had stocks move literally hundreds of percent, thousands of percent in one day off of this headline. Now, I saved it for last because this hype could fade. A lot of times, the market is known for euphoria. It goes all in on one thing and then it's that shiny object, come winter, there's another new theme, and all of that money and all of that hype rotates out. But right now, anytime you see any of these stocks announcing the fact that they're starting one of these Bitcoin treasuries, Bitcoin reserves, or other crypto reserves, it is the hottest sector right now. So in summary, the right catalyst, and I gave you all the right ones, can absolutely send a stock flying. The wrong one, just a distraction, okay? If you go back to my example from today of them knocking down a wall and getting ready to build a data center, want to know where that stock is right now at 4:30 Eastern, all the way back where it came from. The people that chased the headline, chased the hype, lost money. The people that followed everything I showed you in this video never bought the stock, and I don't really care what it's doing right now because I didn't fall for the hype. Focus on the news that matters, that creates real results, real money, and real momentum. And make sure you subscribe because in the next video, I'm diving into how I trade midday movers, okay? Great risk to reward, focused on a very specific pattern into the afternoon, and how they lead to some of the craziest moves in the market right now.